And welcome back to another episode, I guess, extension episode of Club Conversations, where we're talking about customer experience and how it's the ultimate competitive advantage. We're already starting off on me not being able to use my words. So this might not be a bestseller, Josh. I'm sorry. But on
We got
today's
a lot of time.
podcast,
There's still a
we have
lot
a
of
lot of
time.
time. This one's probably going to be the longest podcast. So if you're tuning in, you might want to avoid listening to it. But on today's episode, we have Josh Roche with Roach Wealth. And if you can't tell by the last name, he might be loosely related to me. That's still kind of we're not for sure. But Josh, welcome to the podcast.
Hey, thanks. I'm excited to be here. Thanks for having me on.
Yeah, it was a big honor. You're a hard one to get a hold of. You know, I know you're just sitting in client meetings all day, so it's really hard to get you out of it. But I've been told financial advisors only spend 80% of their day on the golf course. So I'm glad we could spend the 20% actually talking.
85 is probably more accurate, but
That's fair.
yeah.
That's
Yep.
fair. Well, awesome. Well, as I've made the introduction, Josh is obviously my middle brother. I've already mentioned that I have one of my favorite brothers on the podcast, and now we have another one of my favorite brothers on the podcast. So we have fulfilled my life goal. We'll be shutting the podcast down after this, but here we are. Now, Josh, actually diving into the real serious stuff, can you give us a quick little intro to Roach Wealth, right? And how you approach customer experience in the financial services industry?
Yeah. I think it's one of the ways that we really try to differentiate ourselves. There's plenty of financial advisors. I mean, here in the office complex where I've got my business, I think there's actually 4 financial advisors and maybe a total of 20 offices spread across this office park. So it is something that I use as a way to diversify ourselves. And I think that the customer experience is so important, especially on something that's such a sensitive topic. Your money is deeply personal. You don't typically talk about a whole lot of money related items with your friends, your coworkers. I mean, it might come up, but it's usually pretty surface level, or it involves around how much money you made or a great investment trade that you had maybe made. Or so it is something that we have an opportunity to really partner with clients and get to know them on a deep level. And I think if the customer experience and if that's not taken seriously, it's really hard to get to a deep level with that relationship. So, yes, here at Roche Wealth, we've really tried to make that an integral part of the business, is spending a lot of time building the relationship before we start talking about the nitty gritty money stuff.
Love that. That's awesome. And we know, based on that, right? Financial services can sometimes, right, feel a little impersonal. So when it comes to you doing business, how do you ensure that client relationships stay at the center of your business?
Yeah, that's a really good question. Yeah, I'd say there's a lot of bad actors, if you will, in the financial services industry. You might position yourselves as a trusted advisor, and instead, I have a very clear, defined motive behind it. But when really truly serving the client, it all revolves around their financial health. So we believe that it involves high touch, a lot of contact. So we visit with clients at least twice annually in person to really do a deep dive into their financial plan, into their investments, make sure they understand their allocation, that we have everything invested appropriately. And then we spend a lot of time outside of those reviews on the phone, showing up to a ball game or to support their family, because it happens where most of these clients, if treated well, end up becoming friends. And so the business is a business that revolves around finances and being a trusted advisor to people about their money. But at the end of the day, this is a relationship business. It's about caring for people and then using our expertise when it comes to money and financial planning and tax planning, and then leveraging the relationship that we have to get to have the opportunity to share that expertise.
That's awesome. I love that. And the
And then
best
it's up
part
to the
is,
person whether they want to take that expertise or not.
yeah, exactly. Well, and it seems like it's very interesting. We won't dive too far into it, right? Because we're not talking about fake gurus or fake numbers or things like that. But it's very interesting when you see the financial services industry, right? It's kind of like marketing. There's a lot of messaging out there, and sometimes it's good, sometimes it's bad, right? But it's filtering all of that and allowing for your customers to filter all that through, right? And that
Yes.
baseline starts with the relationship, and if there's the relationship and the trust, makes such a big difference.
Yeah.
So I am curious, when it comes to the wealth management space, what does customer experience actually mean to you? And I know you've had some experience, right, working for corporations, other financial services companies. So, how has that definition evolved over the years, too, from your prior experience?
Yeah. Yeah, that's a really good question. I think that my time at Paycom, which was my first career right after I graduated college, and then moving into Edward Jones, where I was a financial advisor, and then to eventually start my firm here at Roche Wealth, it has really built, I feel like, my vision of what it's like to have a good customer experience. Here in the financial services space, I think specifically, if I could encapsulate, kind of one sentence or one paragraph, it's that reminding ourselves that personal finance is deeply personal, and oftentimes there's sort of a right numbers answer. We can do the math and we can find what makes the most sense from purely a numbers perspective. But let's face it, personal finance is a whole lot more about emotional, behavioral, rather than just a math problem. And so when we think about the customer experience, we think that it is important to have high touch, a great relationship, good software that allows a client to be very engaged in their financial plan and investments. But also from the advice side of things, I think it's a good reminder that why we strive for such a deep relationship is because we have to be reminded each and every day it's just not a number. I use this example quite a lot when a client says, "Hey, I've got some extra cash and we have some debt. What should we do? Should we pay off the debt, or should we do something else with that money?" And I bet I have a different answer nearly every time that I get that question, because yes, and I'll explain that there's a quote unquote right financial decision. But when you start to factor in some things like, what's the client's perspective on debt? Do they get stressed when they have an auto payment? And is that stress then in turn having an impact on the other parts of their financial life? Probably so. And so maybe we might take a lower interest rate loan and pay it down because that's what's best for the client. So when I think about customer experience, it's a lot of different things that we talked about. But one of the ways that we really try to shine through is making sure that our advice is deeply personal.
Yeah, that's awesome. And obviously, it comes through because your clients love working with you. So,
I
love
hope
that.
so. Yeah.
Now, when it comes into understanding the customer mindset, right? Put yourself in the frame of a business owner, right? So when we're looking at financial services, I think we can both agree that trust is everything, right?
So
We've
true.
identified that earlier, but it's a big key. So, from your perspective, right, from a business perspective, actionable insights, what strategy to use? Like, do you have certain strategies that you use to build and maintain trust with your clients, or techniques, or what does that look like?
It's a great question. I don't know that I have a secret sauce for building that. I do think that it is about repeated and consistent connections, relationship wins, building trust through ways that look a whole lot more than just, having good investment results. It's consistently adding value to that relationship through calls, through clear, concise communication to clients. But it is something that takes some time. Sometimes we start on third base because we get a referral from somebody who then comes into the office for the first time and already has kind of a baseline level of trust. And then sometimes we start, from the get go, where they found our website and wanted to come in for a discovery meeting to learn more about maybe how we serve our clients. So I don't know that I have a secret sauce, but I do think that it's all about consistent, repeated contacts, small deposits, if you will, into this relationship bank where they get to know us and they see a consistent product, consistent advice, consistent value and delivery of what we've promised them. Good financial
Yeah.
advice, good investment selection, good financial planning, etc.
That's awesome. And one key that I've actually taken from watching you grow your business that's actually really helped my business is I remember when you first started Jones, you would go door to door to businesses sometimes and bring cupcakes or different things like that, right? And it's amazing what a small little gesture act like that does to develop a relationship or show someone that you care. So I think it's
Mm-hmm.
a really neat concept that you do is, it's not just about the conversations, right? It's about when you interact with someone, remembering their kids' names or what sports their kids play or the little touch point. I think you do an incredible job of that. So I think it's
Yeah.
a really good key that I think you provided some really good aspects of that. And as we know, diving into a little bit more into the customer experience, right? we know in today's world that people expect personalized service, right? It's,
Yeah.
there's E-Trade, there's other ones that someone could just sign up for and start a brokerage service. So when it comes to someone hiring Roach Wealth, or they sit down, for the first time, what does that experience look like, or how do you customize financial strategies for different clients, but then also keeping the experience seamless, right?
Yeah.
Because there's two aspects to it.
Yeah, definitely. And I think it gets complicated because it becomes so personal, and personal means unique, and unique, it's hard to build really efficient systems around, at least to get to maximum efficiency. Even when these robo advisors started coming around, where you go out to Fidelity, they have a product called like Fidelity Go, where you can just pay a really small fee. You kind of answer a few questions. It just says, here's how you should invest your money, and we're going to do it for you. And that's that. And it's fine. I mean, it works for millions of people. So if that's what you're looking for, it can meet your needs, and it's brought costs down for the end client, which is, a good thing. But it's also created more value for why you need a financial planner. The same question, going back to that mortgage question of, do I pay off my debt or not? I just don't think any, AI agent or chat GPT or any robo advisor is going to be able to truly get to know you at the level that's necessary to help you make a decision that's just not purely about the numbers and the financial data. It's all about your emotion, your behaviors. And if it gets to know us at that deep a level, we might be in for some trouble. So maybe one day it will, but still today, it goes back to that human aspect of, if I know somebody's tendencies, maybe it's towards overspending. The way that we might set up their financial plan gives us some breathing room that they're not going to take a huge penalty if they overspend. It's conversations and decisions like that become deeply personal, that just emphasizes the value of the human side of things. Why you need a person, not just an agent or a software or service.
Love that. As we've discussed personally too, there's some people that they wouldn't sweat having $1 million worth of debt, and there's some people that sweat when they
Yeah.
have $5 worth of debt, right? When they
Yeah.
have $1 million in their account. So I think it's a really interesting perspective when it comes to personalizing the experience.
Yeah.
Now, I know communication's kind of a vital thing in your industry as well. So, what role does proactive communication play in maintaining those strong client relationships for you? And as from the business perspective, do you have any systems in place to ensure that you're getting those consistent touch points?
Yeah, good question. I think communication is super key for my business, for so many other businesses that look at mine and even don't look like mine at all. I think that as a person, we always want to be informed. We want to feel heard. And so this is a very sensitive topic, our money. But if I don't feel like my advisor knows me, cares about me, communicates with me, all those feelings are what we get through communication, then I just don't feel like a very important part of the business at all. I think about even just recently, we've had a lot of volatility in the market. And, if I'm not contacting clients during that time, it's easy for them to think he just doesn't really care. And so communication is super important. And that's why we've set up these semi-annual reviews. A lot of advisors will just do annual reviews with all clients. And so you meet once a year. Sometimes it's maybe just a phone call, but we want to meet at least twice per year because there's value in that, even if it just leads to a discussion about what's going on, how it impacts their investments, and helping them leave feeling more equipped and confident in our plan. And then smaller phone calls, just even to let them know we're thinking about them, just to make sure they don't have anything on their mind. I feel like, especially when I got started at Edward Jones, I acquired a lot of clients because communication was bad. And so you have this benefit when communication's really good, where you can even identify problems. Maybe somebody's really unhappy. And if we can if we can identify that first, then we can start working towards a solution. Whereas if there's no communication because I think there's a problem, and so I choose not to communicate, the client's probably not going to call me. They're probably just going to leave anyways. And so eventually it creates this rift that a client leaves, and it could have been totally avoided, maybe with some difficult conversations, but just with some communication. So
Interesting.
crucial. Yeah.
Interesting. I've got a good question about difficult conversations, but we'll wait for a minute.
Okay.
So as we dive in, the other piece that I've been curious to think about, and I think some of our listeners might be interested in, is from a financial perspective. do you find that clients prefer digital resources, face-to-face meetings, or a hybrid of both when it comes to managing their finances?
Yeah, I think a hybrid of both. Everybody wants some good technology that's available at their fingertips. So at 9:30 p.m. when they're reconciling their budget or they hear on the news the stock market's really ugly, they can log in and at their fingertips they can kind of get a pulse of how are things going. They can go and look at their financial plan and say, am I going to be okay? Do we have a plan for this? So I think that is important to have some good technology, especially for our generation. Younger investors want to be connected digitally. But I don't think that's it. I don't think they only want digital touch points. Just Maddie, my assistant here, and I were just talking about this. And as we launch into our spring financial surge reviews, we are going back to paper reports because when I'm sitting here meeting with a client, I want them to leave with a physical packet of material. And oftentimes we refer back to that packet of material because it's much more personal. It's tangible. It's something that I can leave looking at. And I think that clients care about it. That's the only reason that we're going back to that, not because I want to just print a bunch of extra stuff. So I think that it's got to be a combination of using technology to help serve a client, but not only using technology.
And killing trees in the meantime. So here we are. Great.
And killing
Thanks.
trees. Yeah, I'm killing a good amount of trees this
Love
quarter.
that. We'll think about all the trees in mind. Now, I am curious, right? I have to ask this question. Have you seen trends specifically within fintech that you would believe will maybe shape the future of customer experience in wealth management? And if not, no worries. But I'm always curious asking trend wise, where are we looking?
Yeah. I think there's a lot of trends at play. I think that over the last 15 years, the accessibility for average investors, average families, and households to become equipped and invest on their own has increased. And I see that as a really good thing. I see that savings rate among families, that's kind of always an interesting statistic, but that waffles back and forth. It's gone down recently. But, if we looked at the amount of investors that were starting saving for the retirement, I don't know that I have numbers on this, but I would venture a guess that it's probably gone up. And maybe part of that is the amount maybe has gone down due to inflation and impacts, but the accessibility for somebody to go open a brokerage account to then be equipped on maybe what investments to start buying, and then to do so in a really easy, quick format with low cost is more accessible than ever. And so I see that as a really good thing in continuing to adapt and evolve. What I think is maybe a bit damaging is because of that same accessibility increase, you see tons of things like option tradings and speculative names where, it looks and feels a whole lot more like gambling than investing. And I think that can do a lot of damage. And again, maybe bringing why advisors and persons are important in this role. But I do feel like the robo investing, the ease and accessibility for just everyday families will continue to grow and evolve and adapt. And probably to some level to begin including behavioral finance and emotional investing too, where a true robo investment advisor could get to know you more than just what's your risk tolerance and how old are you.
Might be a little terrifying, but it'd
Yeah.
be interesting to see. I like that perspective.
The other thing is there's some access to like more private investments. It's kind of wild, but the number of public companies that you can buy and sell in the open market here in the United States has actually shrunk the last 20 years.
Really?
On the contrary, private businesses have grown. And so because of regulations, because of cost, because of shareholder influence when you go public, many companies are just choosing to stay private. And historically, private investments, things like venture capital, private equity, private credit has not been accessible to the average or retail investor. It's usually hidden behind a requirement to be an accredited investor, to have over a certain net worth or income. And a lot of those, because of technology and because of efficiency improvements, are starting to become more readily available to the mass market, which is also a really good thing because you see some great returns, you see some great opportunities now and in the future in those types of businesses like yours and mine.
Interesting. Love that. It'd be interesting to see. We'll come back to this episode in 10 years and maybe AI will be running everything by then.
Probably so.
Now, we'll see. Now, shifting the conversation a little bit, right? You've mentioned difficult situations or handling client concerns, right? Because obviously, we know in business, sunshine and roses aren't the exact situation at all times during running a business. So we know, right? Or we can assume that money is emotional.
Yeah.
So I'm curious to understand, how do you navigate difficult conversations with clients? Whether it's maybe market downturns, unexpected life changes, financial setbacks. I'm sure you see kind of a wide range of those things. When it comes to that, how do you handle that?
Yeah, good question. It probably most commonly rears its head in the form of market fluctuation. Somebody a bit upset or worried about what's going on in their investments.
AKA me. Just kidding.
Yeah, exactly. And I try to get ahead of that by leading any relationship with the expectation of there's going to be some things that we can control and some things that we can't. No matter how long I'm going to be in this business, I'll never be able to predict the markets. Just, I might be able to get it right once in every 10 times, but in general, we look at history and we see this path up and to the right, and that's a positive thing. And we know that just with time and a good portfolio, you've made an incredible amount of money. And not to say that we're boring and passive like that, but we're not going to make these big bets on whether things are going to rise or fall any given day, week, month. And so I think it's crucial to set that expectation up front to try and avoid some of those difficult conversations, or at least then reinforce that first expectation when we have the difficult conversation. And then it's reminding a client about history, looking back at past times we might have felt this way. And I'm specifically talking about that difficult conversation around performance and why are my investments down 22% this year. That is difficult, but can be helped by reminding the client this is not unexpected. This is not abnormal. This is actually quite average, expected, and going to happen a whole lot more times in your lifetime. And this is part of investing, reminding them what they can control. Here's the other thing that's been a problem recently is just how accessible news are. I get probably 40 notifications every day on my iPhone. I'm sure you do too. Probably get more because your phone is much more popular than mine. But, notifications about the news, and it's all opinion. It's like, Trump did this, Biden did that, they did this, they did that, they did this, they did that. And my gosh, every time I see one of those articles for a nanosecond, I kind of get charged up, one way or another. It's like, oh, I can't believe that. And then I'm able to let it go quickly. But, imagine the amount of content and information we're consuming, and that has an impact on us. And so during that time when our investments are down and, Jim Cramer's yelling at everybody to sell or buy or whatever, I mean, it's just very easy to get emotional. And so it's important to think about the things that we can control. Like we can control our emotions. We can control the content that we consume. We can turn that notification news articles off. We can turn the TV off or only watch, Love is Blind or something more fun. We can do things like control our savings rate. So if things are a bit concerning, we can pull back on some of those discretionary expenses, some of those things that are fun to have, but maybe can be delayed by a month or a year. So those are things that we can control. And so it's always trying to frame this conversation of, we're on the same team. I want what's best for you, and I'm working for you, and I'm working as a partner to your success. And so for that, I want to identify things that we can control. And unfortunately, one of those things is just not the returns that you have in your portfolio.
Yeah. I think those are some interesting insights and some golden tips right there because, I'm probably 2 of those notifications a day when I'm sending you Twitter articles of subprime auto rates that are going up or down or how the market's freaking out. But I do think it's an interesting concept, right? We have all of this accessible information, and AI definitely hasn't helped it as well either. But when we look at that, right, there's so much accessible information. And when we, act emotionally very quickly, there's that statistic, you probably know it better than I do, but right, that the largest amounts of returns from the past 20 years or something like that have been made in the past, a single day, right, within a year period. And so when you act emotionally very quickly, you could miss out on the largest period of growth. So I think that's a really fascinating concept.
Just
Now,
yesterday, I was looking at a study from Hartford. Hartford's like an investment manager, Hartford Funds, and they put out a piece of what would have happened to your returns if you just missed like the 10 best days of the market in the last 40 years. And the difference is astounding. This is going to be rough. You can go look the article up. I'm sure it's You could Google Hartford Funds missing best 10 days of the year, and it looks at the S&P 500, I think, for the last 40 years. And it was something like if you miss the 10 best days of the stock market, the S&P 500, over the last 40 years, your return during that time frame was more than 50% less. So I think it was like 54% less was your sum of money and what it accumulated to over that time period, just because you missed 10 days in 40 years. It would take some special skill to jump out of the market just on those days and only those days. But let's face it, a lot of those really large number days come at the bottom of the market or as we near the bottom of the market. And that's typically when people want to get out of their investments.
It's fascinating. I actually pulled it up and it says missing the best 30 days would have reduced your returns by an astonishing 83%, which is absolutely insane.
Crazy. Yeah.
Good to know. This is why you need to download Robinhood and day trade like I do. Just kidding. So, all that being said, there is the piece that many businesses, we think about it, right? They're struggling with customer retention, right? So, do you have any advice or key things that you do to essentially turn those first-time clients into long-term advocates for Roach Wealth?
That's a really good question. Something that I've tried to do, and I think there's an author, somebody that gave me this idea of eating the frog. Maybe you know who that is, and I can't recall who it is. I think there's somebody who wrote a book. Maybe it was James Clear, Atomic Habits, or something else. But they talk about eating the frog, and it's kind of like the big scary thing that you kind of dread doing. You ought to do that right away on Monday morning. And so I find myself, even in times when the market gets really ugly, there's this hesitancy. There's this hesitancy to call, to pick up the phone, to make contact with that client, because I think, gosh, this might just not be the best of conversations. They might already be upset. What am I going to be able to say to them? And so there's this moment of doubt in whether it's a financial services business like mine and we're dealing with investing, or whether it's a consumer product business. I think we can all kind of find situations and circumstances where we have that exact same feeling. There's this reluctance to call because it feels like maybe the start of a problem. And those are the times you need to pick up the phone and call the customer. You need to build the relationship. You need to show that you care just by being present in that conversation. I don't have the answers. I don't have a timeline of when this market correction is going to stop. But I do have the ability to build confidence with that client and make sure they understand that I'm monitoring things, that there are some things that we can control and I can give them ideas on what those are. So it's like, it's the times that we feel like, I don't know, I don't know if I should do this, that we just need to do it, because that's going to really, over a longer term period, make huge deposits into that relationship bank.
Yeah, for sure. Look at that. Don't make the call or make the call, one of the two. That is the question.
Make the call when you don't want to. It's never, I don't think it's ever going to hurt you. Let's face it, you make the call, client's upset, and they left because you made that call. Well, I'd venture a pretty good guess they were going to leave anyways.
Yep, 100%. Well, it's really fascinating, right? Because we like to, I don't know about you, but I personally like to internalize things or make up situations or scenarios, right, that are not correct. I've been challenged. I've been reading a couple books, right, about leadership and business ownership, and they come back to this core concept, right, that we forget that people are more traditionally focused on their personal life or what's happening in their life, and they're more concerned about that than what's actually happening with you, right? So yeah. I personally like to internalize issues where a client sends an email, right, and they go, we'd like to have a check-in or something like that, and you go, your mind goes automatically of like, all right, what did we do wrong? Where have we lacked on performance? What are they going to ring us for? And what's incredible, right, is I personally do a great job of getting myself ramped up for these conversations and absolutely anxious. You press the button, you hop on the meeting, like, all right, here we go. We'll see if they fire us. And they go, hey, how's it going? Good to see you. And the conversation completely shifts and you go, well, I was completely wrong on that. And so it's amazing sometimes in those conversations where we think it's going to be an issue, but sometimes there's that respect or that like enthusiasm of like, you were the one that directly reached out about this, or you had this conversation. That means a lot to them, right? So I think that's a really great concept.
Yep. Just showing up, showing them that you care. I think the vast majority of people have reasonable expectations. They want to be cared for. They know that you don't control things like market performance. But if you don't talk to them, if you don't call them, if you're not available during that time and showing them that you care, then there's going to be bigger problems and they're going to eventually leave. So Not
For
making
sure.
the call, being present, showing up, showing them that you care.
Some good thoughts right there. Now, as we think about wrapping up, I'm going to give you two questions in one, right? Because they're somewhat related, and if I asked you them back and forth, they would seem a little about the same. So, I'm going to give you two questions here. One, what's one thing you wish more businesses understood about building great customer experiences? And two, could be the same thing. If there was a piece of advice or one piece of advice that you could give to businesses looking to improve your customer experience, what would it be?
Those are great questions. I'll start with the first one, and I think it's just top of mind because with AI, there's this huge conversation about efficiency. And I feel like small businesses and big businesses can sometimes become guilty of trying to maximize efficiency and not evaluating the true long-term cost that efficiency might bring. And a lot of businesses maybe can thrive off of just an extreme efficient process, customer transaction. But I think a lot of businesses are going that direction and have just lost the idea that people want a relationship. They want something that's quick, that is good value, good timing. I don't want to, spend 30 minutes on hold, but maybe I'd rather having a 5-minute conversation with somebody that knows me and deeply cares about me than a 20-second conversation with the chat agent. I don't know. And so I think that people need to take a moment to slow down and just evaluate, is building efficiency into this process, into this experience, going to save me time but cost me something else, like my client, that's way more important. And I kind of lost the second question. Can you tell me again what was the second part of that?
If there was one piece of advice that you would give to businesses looking to improve their customer experience, what would it be?
If it was one piece of advice, I would say spend time with the people that interact with the customer most. I think that at Paycom, this was kind of a good example, but they did a great job of collecting feedback from what were referred to as our specialists. Our specialists were like the day-to-day talking with clients, boots on the ground of these relationships. And so for an executive to make a decision or a big process change without first talking to the people that were ultimately serving our end clients would have been really poor. And I think there were a few examples of that happened and caused a negative in the business. But I do believe that the majority of the time they were really good at listening to feedback, gathering it from the people that were serving the clients day in and day out before implementing a big change. And I think that's really important. We can all talk about efficiencies and cost savings, but we have to look at the short term, but also the long term impacts of those decisions.
For
So
sure. Those are some great insights right there. Man, spoken like a true business owner. I love it. Well, hopefully this has been a entertaining and insightful episode for you to listen to from Josh with some great gold tips. And if you are curious about connecting with Josh, he's on LinkedIn, Josh Roche with Roach Wealth. Obviously got a website, roachwealth.com, designed by the greatest marketing agency in Oklahoma City. We'll avoid that, though.
incredible.
The worst, actually, the worst. Don't look at our Google reviews. Now, if you're interested, highly recommend connecting with Josh. He's really great at being available for coffee and just having a conversation, no sales approach. So that's one thing that I'm grateful for with him. There's a lot of things I'm grateful for that made it sound like I'm grateful for one thing. So here we are. But that being said, Josh, thanks for being on the episode, and thanks for tuning in.
Hey, thanks so much for having me, Caleb. I enjoyed it.